So I'm just going to pause. And in the previous section, we did the first part of our global growth outlook. The most important things to mention there is the purpose of that section, which was for rapport building and for adding value to the client in that we have more research expertise than they typically would. So we are just giving them a global growth picture. In this slide, what we're going to do is we're going to bring the global growth picture back to the company. So it's not very useful for the company for us to talk about everything that's happening in the world if we don't tie it back to how it affects them. And that's what we're going to do in this slide now. So, continuing. So, as we can see in this chart here, we have the historical performance of the US dollar to South African Rand gold price. Now, ABC Mining's costs are denominated in Rand because the mining operations are domiciled in South Africa. So the exchange rate is quite significant because the company reports its earnings in dollars. So when the dollar strengthens, in other words, for a weak Rand, and you're reporting your expenses in dollars, it means that your expenses would then be understated because you're converting your Rand expenses at a higher rand or a lower, a stronger dollar, basically. So when the dollar is strong and the rand is weak, it understates your costs from a reporting perspective. And this is important because it affects the perception of shareholders and the perception that they have of your company. So we're going to look at the exchange rate historically and the gold price as well historically versus what is happening at present in the markets and how it is projected to behave in the medium term in the future. So, what our price targets are for gold, we do anticipate a very strong performance in the gold price due to uncertainty in the markets and whether it be geopolitical tensions or uncertainty in financial markets globally. Gold is seen as a safe haven asset, so we predict in the medium term a very bullish picture for gold price performance, and we're targeting a $3,000 an ounce gold price by 2024. For the exchange rate, because the South African Rand is still largely seen as a gold driven currency, we anticipate a very strong Rand, but also a strong dollar too. Now, we anticipate a strong dollar because most of the global debt today is denominated in dollars. So there is natural demand for dollars in servicing that debt. Foreign countries need dollars to service their dollar debt. So demand for dollars will relatively be strong in the medium term. And the more that these countries continue to run either fiscal deficits or continue to lock down, these countries would typically need to borrow more funds from these international banks in dollars, denominated in dollars. So, in order to service that debt, we anticipate dollar strength to remain strong going forward. So, basically, in summary, what this slide has done is we have explained in the previous slide what the global growth outlook is, and we've condensed it back down to how these key drivers or these fundamentals that actually do directly impact on the customer, what our predictions for them are going forward. So if the presentation was just to end at this point, the company or our client would have derived an incredible amount of value just based on where we see the market going forward. Now, they may disagree with us, but it's always nice to know what other people are thinking, especially people who have invested a lot of time and effort into researching. It's always good to bounce your ideas off a independent third party, such as a consulting firm or a bank.